Access Capital Partners, a leading European private asset manager, has been investing with Palatine, UK mid-market private equity fund since 2007. As a responsible investor, before committing capital, Access always pays attention on whether the fund manager has formalized its own approach to responsible investing and how well environmental, social and governance matters are handled in their deal-making and monitoring processes. Strong ESG integration and management is a key attraction for Access. We very much look for strong alignment of interest between our own investors, our team and the fund managers that we are backing.
Palatine started to look at ESG matters in around 2010 when we realised that ESG was getting more important to our LP investors, in particular Access Capital Partners. We developed an investment code along with Houghton and FWA, which sets out Palatine's stance on ESG in terms of partner commitment to both time and resource to the ESG. Pre-deal, we have 3 tools that help us to screen our investment so that we know where we are on ESG matters when we do the investment. Post-deal, all our companies go through a baseline review within at least 9 months post-investment. We have just started to conduct exit reviews on these companies as well that can really demonstrate to our investors how we've managed to improve ESG matters within those portfolio companies.
At Access Capital Partners, we are continuously improving the way we incorporate environmental, social and governance risks to serve our overall global risk management framework, both at fund level and portfolio company level. Access has many public pension funds in its investor base, and for those investors, reputational risk is extremely important. Besides, we have the strong conviction that sustainable growth cannot be achieved in businesses without considering the environmental impact, without managing social health and safety properly, and without having a strong corporate governance policies into businesses. Actually, correlations between active ESG management and value creation are beginning to emerge in our data bank. In the Palatine portfolio, for example, we are clearly see benefits of a strong and robust ESG management, such as job creation, energy consumption reduction or stronger policies into businesses.
Over time, we've come to realise the real added benefit that ESG can add across the portfolio, and we have a number of case studies where we have both reduced cost and increased productivity in the portfolio companies, such as reduced absentee rates, reduced staff churn, and also recycling of energy within some of our restaurant and hotel chains. From a Palatine point of view, we've also seen that winning the 5 awards from the BBCA has really raised our profile within the LP community, and when we were raising Fund 3, it enabled us to have investors with an ESG focused as well, such as the Church Commissioners. We believe that working together with our investors will help create value for all concerned. When we first started out on our ESG journey, we spoke to a number of our most active ESG investors, including Access, and what they wanted to see from our programme. We believe at Palatine that ESG is a journey, and we've just started out on that road, and working in partnership with our investors can only help that journey.